All right. Hey, everybody. I hope you guys are having a good Sunday and weekend so far. In today's chat, we're just going to talk about what's happening in the market, why I held off from a trade last week, but I do have a trade idea that I want to also talk about for Monday. So, depending on how the market opens, ideally we'll get some sort of a little bit of a bounce up. And then maybe we'll be able to jump into a declining bias trade there. So let me pull up SPX. Let's hop over to the daily chart. And we'll make this big for now. So, hey there, Mitzi. Great to see you. Good morning, afternoon, right? Depending on where you're at. Um, so great pin at 4,400. We've been seeing this quite a bit, at least this past week, right? As the market's been declining. Most of the time, it's given us a little bit of either a bounce at the open or some sort of pullback, and then it just ends up dying into the close, and we have continued to stair step down on a daily chart, which I will show you as soon as it decides that it wants to load up. Let's see. Still taking a second. Oh, it looks like my Thinkorswim says it's disconnected. Let me try to reset it, guys. I'm sorry. It looked good before I started. If not, we can just use Tastyworks Charts for this session. But basically, right, as I wait for Thinkorswim to get going here, what's been happening in the market is we've been continuing to decline. I put out a Twitter poll earlier this week asking what you thought, right? Were we going to hold the 100-period simple as support, or were the bears going to take over? And the bears ended up winning, as you might have found out, right, by the end of the week. Okay. Yeah, let me just pull up Tasty. We'll look at Tastyworks charts. That's okay. Looks like I think Thinkorswim's acting a little weird. Okay. Well, here's Tasty. So with their charts, this is the daily chart for SPX, as you can see here. It has not all, but the majority of the indicators that I like to use on Thinkorswim, so you guys can see most of them there. But what we've seen here, right, earlier in the week, we were kind of testing the 100-period simple. And for the majority of this year into last year, it's been a pretty strong level that we've held. There was at one point back here in October where we kind of hugged that level, kind of was trading below it, trading above it, but it was a bit choppy, still holding on. And then we bounced back up into a new high. But this time around, right, we're breaking it pretty strongly. We went back up, tested it as resistance, failed it, and as I mentioned, let me just zoom in here. Right, you can see we ended up closing at or near the lows of the day, and that's because on the intraday charts, we continued to run to the downside. It looks like my Thinkorswim popped up now, so let me log in here, because that way I have the grid saved up and ready to go. And for those of you who don't have two brokerage platforms, I certainly recommend it, right? Because this is exactly what can happen, and it's the worst thing to happen when you're out and about trying to trade, and you're like looking for a setup, you've been waiting for it, and then all of a sudden you run into technical issues just because, you know, one of the platforms is seeing an overload or having issues, right? I'm sure Robinhood people have experienced that in the past. And so what I like to do is I like to have at least two brokerage platforms on at all time. That way, if one's down for a technical reason, but there's still a trade I want to take care of or something like that, I have the other brokerage account to be able to do that. So I personally right now use Thinkorswim and Tastyworks. Mainly Tastyworks, but Thinkorswim, of course, I like their charts quite a bit. But, Tastyworks is coming up, has some of the simpler indicators there and stuff. So I certainly like having that as well in case Thinkorswim's down, and I can still look at my indicators now too. Okay, let me close some of these windows so it doesn't take too long to load up. And while we wait for it to load, let's bring back up Tastyworks again. So, right, we've started to fall below the 100-period simple. The Bollinger Bands are flaring open. We can see that stair step to the downside. And so the trade I meant to put on Friday, and I didn't quite get to it. I was able to put it on the Mastery, and then I forgot to do one for the $500 challenge. So this is the trade idea I kind of want to look at on Monday. When you see a sell-off like this in the market, and it's just kind of like bleeding lower, and especially when it's towards the start of potentially a stronger pullback, you'll have what can sometimes be called a margin call Monday. And in short, right, the only thing that we need to take about that as traders is the fact that typically when that occurs, it means that the market is going to sell off. And so as a trader, we need to be prepared for that potential bearish sentiment and downside. Now, this could happen right at the start of open on Monday, right? It could be that maybe we get a little bit of a bounce and then it starts to happen. But I would not be surprised at all if Monday is a bearish tone to it because of us selling off into the close Friday. And technically, we did not hold 4,400. We're right below that at 44.97. Right now it says 94 cents. I'm not sure what the change was on the close. Very close to 4,400, but it broke it. So because we're closing near the lows, because we keep seeing that, what I wouldn't mind happening is something like we saw Thursday, right? Or even, Thursday was a great pullback. But even something like Friday, right? Where we just try and either open above Friday's close or we get a little bit of a pullback in that range to test it. And if intraday resistance holds, I will be looking to put on some sort of bearish trade idea. Now, the way we've been doing this in the Profit Recycling Mastery and in the day trading room is by profit recycling and doing intraday trades. Basically, for myself, I have been mainly in cash overnight throughout a lot of my accounts. And what I've been doing is we've been intraday trading to the downside, right? Locking in profits. The profit recycling allows me to technically not trigger any of those day trading rules. So that's always nice to be able to take advantage of those intraday moves. And then, of course, it brings the capital back into the account. So I don't have too much overnight risk because my initial plan on this move was to treat it, right, as if the 100-period simple would hold. So I was looking for potential buy-ins. I was sitting on cash waiting. And then once we strongly, of course, started to break the 100, once the Bollinger Band started to move open, the thought process was, well, I only want to intraday trade this to the downside and see where support might hold up. And certainly it bled lower. So unfortunately for us in the $500 challenge, I don't plan to profit recycle in here because it's, unless you know the strategy, right, I get a lot of questions around it, I guess is what I should preface that as. And of course, for intraday trading, because we're in a $500 account, we're limited to 3 of those a week. Now, maybe I'll still do 1 or 2. Maybe we'll participate like that in this market if it does continue to sell off as it is, because sometimes those can make for excellent profits to the downside. So maybe we'll do like 1 or 2 each month, so that way they're, we have that available to us. But I typically, obviously, if my account's under 25,000, I really don't like to use those day trades. I like to keep those in reserve in case like in Tastyworks last week, I kept opening one trade and I meant for it to be in a different account. And so I had to like day trade, out of that account and get that trade in the right account. So that's what I usually save it for, my mistakes on my own end. But maybe we'll participate in that way. The other way, though, like I mentioned, that I want to participate in this is if on Monday we get some sort of bounce or intraday resistance ends up holding and it makes for a potential entry to the downside. And of course, right, we want the technicals to be pointing down. If Monday is for whatever reason, which I'd be really surprised, if it's not a margin call Monday where we're not trading to the downside, then obviously we would maybe look at a bullish idea or, start to look at something on the other end if that's what the technicals are telling us. But right now I'm inclined to play it bearish because that is what I am anticipating for Monday's market. So if we get the signals, this is the trade idea I'd like to do. Now this would be a slight lotto trade, and maybe we would push it to Wednesday. My hesitation about pushing any sort of trade to Wednesday or Friday's expiration on SPX or anything like the overall market, like the Qs, right? SPY, NDX, RUT, anything like that. The reason I have a hesitation doing it for past Wednesday on the expiration, because SPX has Monday, Wednesday, Friday expirations, is because of the Fed announcement. What I think is probably happening right now, right, going into next week, is we're seeing this decline. I think Monday is probably going to be an overall bearish day. And then depending on Tuesday or Wednesday, we might start to see a little consolidation. Might being the key word. We'll have to wait and see. But I think Wednesday is going to be the tell on whether or not this bearish trend potentially continues, or if we're going to start to find a bottom and it could be a potential buy the dip opportunity. And the reason why is the Fed is coming out with their news and whatever else they want to say on Wednesday. And the thing is, right, on the one hand, technically, they don't care what the markets do, right? So they could still continue with that hawkish sentiment. And of course, the internals, unemployment, things like that are pointing towards that stance. On the flip side, we know in the past that the Fed have seen these kind of market pullbacks before when they have introduced the idea of hawkish tendencies. And they'll come out within the next meeting or two and within their language, right? They'll make little whispers of, oh, just kidding, or, oh, it's a little dovish. And whatever they say, whatever voodoo magic they work, right? The market likes it. And then it ends up bouncing back up. It ignores any sort of talk of hawkishness. It acts like it was never a part of the talk to begin with. And then we go on to new highs. So that is my pause for doing anything past Wednesday because, one, I think that uncertainty about what's going to happen is going to be built into these prices. So we might have a little bit of difficulty in general with the theta decay and the extrinsic value past that, kind of like you would prior to an earnings announcement, right? And then the second thing to that is because there's that uncertainty, right? If we were going to hold a trade through the announcement, then it truly needs to act like a lot of trade because anything can happen with that news. So whatever value is tied up prior to that, right? If we're on the wrong side of that news with whatever trade idea that we have, that value could easily get wiped away and go to zero. So I kind of, if I'm going to do a lot of trade, I'd almost prefer to do it for Monday's expiration on SPX because I think that has the better probability of being a bearish sentiment. So what we did in the Profit Recycling Mastery, and I'd like to look at something like this for the $500 challenge account, and we might look at different strikes. We might do a different spread width. Let me make this a little bit lower. And here are the intraday charts, guys. So, not what I meant to do. But you can see, right, overall in this pattern, just yesterday, right, here's the 10-minute chart, or I say yesterday, Friday's trading day, right? We went up, tested resistance, it failed, dropped. This was actually Thursday, right? Dropped into Friday, bounced up once again, tested intraday resistance, failed, and then we dropped, and then we went down to 4,400. And then, of course, similar situation we saw on the hourly chart, right? So it's on the intraday charts, you're seeing those entries quite nicely to take it to the downside, and it can be, a pretty great ride depending on how far it wants to continue to move. So let's pull back up the option chain here. Okay, there we go. So here's the trade we technically have on in the mastery right now. I think we got into this for $1.75. Mitzi, was that it? I know we got in for a pretty good price. I guess I could go just here and see what that is from, oh yeah, $1.75. So we got into the trade for $1.75. It already has a nice profit going into the close. That might change on Monday's open, right? If we gap up, might not be like that. But as you can see, this is a broken wing butterfly. So I did it for the 43.50 pin because that's a nice mini psychological level, if you will. In all honesty, if we really start to sell off, I think this is probably going to go in the money, given the volatility that we've seen the past few days and the ranges that we've seen the past few days. Maybe not, though. That's why I still chose it. But part of the reason why I did the broken wing butterfly was for that possibility of it going in the money. So for those of you who don't know what a broken wing butterfly is, let me explain. It is a standard butterfly, but where both sides are not of equal spread width. So on a standard butterfly, right, it's composed of a debit spread and a credit spread, a debit vertical and a credit vertical spread. And both of those are typically the same spread width, let's say like 10 points, right? Each side is worth 10 points on the width. And they usually both share the same pin strike, right? In this case, 43.50. But instead of doing a standard, we did a broken wing butterfly, meaning our debit spread is a 15-point width, whereas our credit spread is a 10-point width. So what this does is it usually costs a little bit more. That's the downside. Compared to a standard butterfly, it's usually a little bit more expensive, but it allows for a bigger forgiveness factor, meaning if SPX is at 4,300 Monday, right? We move down another 100 points and we're at 4,300, let's say. A standard butterfly would actually be a loss if we had this as our pin strike. Whether we did the 10 or 15-point spread, it would be a loss because the spread would be completely in the money. And for a standard butterfly, you want the underlying strike price, right, to be between your two long strikes. That's how you make money. And certainly the case is the same on a broken wing butterfly, right? You get that max profit potential still if you get the pin around 43.50. So for us at the $1.75 cost basis, our max profit potential is 13.25. Pretty nice risk versus reward, right? However, the forgiveness factor comes in if we go completely in the money. So on this broken wing butterfly, let me just get out my calculator so you guys can see the math, and it makes it easy for those of you who are new to this strategy. So the way you figure out what your profit potential is, if it goes completely in the money, is you take, in this case, the way this is set up is you take the 15-point width debit spread, you take that away from the 10-point credit spread width, so you're left with 5. The difference between your two widths is 5 points. You take away from that the $1.75 cost basis that we paid to get into this trade, and that leaves us with $3.25 left over, meaning if we go completely in the money on this trade, we still have a $3.25 profit potential, a little bit under a 200% return based on the 175 risk. So once again, not a bad risk versus reward there. The downside to this trade is if SPX ends up bouncing up, right? Or if it just stays above 43.65. If we see that, then we're going to end up with a loss. So still kind of a lotto, right? The idea with SPX, the reason why I want to consider this for the $500 challenge account is because if we can get an entry either off of an open, right? And like I said, the technicals have to make sense. It can't tell me that everything's trying to bounce to the upside, right? Then it's like, why would we put on this trade? But if we bounce into resistance levels or if we consolidate, right, if we get some sort of intraday signal and everything else is still pointing that Monday is going to be a bearish day still, I wouldn't mind putting this on for Monday's expiration because SPX is a cash settled index, meaning we don't have any risk of assignment or shares. I technically wouldn't have to day trade this. We could let it go into the close, and if we get in the pin of that trade or if it's completely in the money, we get a pretty nice profit from it. So that's the thought process around that. Now in the challenge account, right, we could do something a little bit less than this, and given where the cost of this trade is currently, maybe we'd have to go a bit further out of the money. But we could do something like with the 4,300 pin. I don't think that'd be bad either. And we could do something like the 10-5 spread. That's actually pretty cheap. So yeah, if we could do something like that, right? Or maybe we do 43.25. But you can see here, right, it's a 90-cent cost basis. So if we get the pin, it's a 9-10 profit potential. If it goes completely in the money, it's still a 4-10 profit potential. So I like that. Let's price out what the 25 is really quickly. It says it's 380. There's no way that's 380. Oh, okay. That's because these are acting a little weird. Okay, well, we'll have to wait and see, but you guys get the idea. So that's probably the trade, the idea or something like that is what we'll look at. I might go with a 15, either 5 or 15 10-point width broken wing butterfly. The advantage of going with 15.5 is, once again, it's going to cost more, but if we go completely in the money, it still allows for a 820 profit potential based on these two spread widths. So that's pretty nice versus $1.80, right? The 1510 would be cheaper, as you can see. But of course, it allows for a bigger spread width, and if we do get the pin, it's going to allow for a bigger max profit potential. So those are the ideas that I want to look at on Monday. I meant to do something like that for, like I said, the challenge account, and it just slipped my mind going into the close Friday. But that's what I'll be looking at certainly for Monday at some point. So don't be too surprised. Usually I open my trades going into the close. Obviously on this one, don't be too surprised if I open something towards the open of market, right? Or in the first half of the trading day. And don't be surprised if it's the same trading day expiration. And my thought is certainly you can day trade it, right? Do what you think is best for your account. But right now, my thought process is I'll let it go into expiration, go into the close, and let it cash settle like that so I don't have to use a day trade. Yeah, so the way it's set up, first of all, Benary, welcome to the mastery. And the way this broken wing butterfly is set up is we have a 15-point debit spread, the 43.65, 43.50. So that's where one contract comes from each of those. And then we have a 10-point credit spread. So because I need two contracts of this, one contract's paired with the credit spread, right? And then one contract, it's acting a little slow, there we go. One contract is paired with the credit spread. That is why it's a 1-to-1 ratio on the contract amount. And that's for any butterfly. Typically it's going to be that like 1-to-1 or 2-for-2 or, well, and then you can, there are a lot of different types of butterflies, but in particular for the broken wing butterfly and the one that I will probably look to put on Monday, for myself, I usually lean towards the debit spread being wider than the credit spread. And that means if it goes completely in the money, then I'll still be able to get a profit on it. Yeah, of course, of course. So kids are still down, right? As y'all know, on Sunday sessions, as long as my kids are asleep for. So let's pull up some scans here, actually. If this market does continue to sell off, we might want to prepare for some bearish scan sentiment. So let me find my simpler scanner. So let's do the bearish. We did the bullish last time. Obviously, this market is not looking too hot for that. So let's change gears. We were going to try and do the bearish last time. We didn't get to it. So we'll do it this time. And for those of you who don't know, this is the simpler scanner. It goes through a lot of different scans. I usually go through the daily scans myself, and I like the ones around the squeeze, the bullish and bearish nested squeeze, and then the continuation pro one. So we're in the bearish nested squeeze. Once again, I like to sort mine by volume. There's not too many on the list for today, so we'll probably be able to get through them all. They're still down. So that's where I'm pulling these symbols from. So when you ask, you're like, Allison, you're just pulling these out of thin air. No, they're coming from there. Here's SPX on the daily chart, right? So here it is on, here it is here. Let's go to the weekly really quick. So the weekly, right, another reason why we could start stalling on Wednesday potentially, or maybe starting to consolidate after Monday, is because we are right near weekly support with the ATR trailing stop, right? Last time we went down towards this in the 30, it held as support. So it could still end up holding. However, momentum still has room to reset, right, towards the zero line if it wants a true reset. This is still a pullback signal. So if we break the ATR trailing stop, that means our next, other than psychological levels, our next main support is down here at the 100 period simple. That's 3,800, right? So that's, that's a ways away. But here's why, right? We could finally be starting to see a pullback now. Yeah, for those of you who are at Simpler, right? Y'all know me. I'm usually more bullish on this market. I got to stick with the long-term trends. I mean, and even here with a pullback, I still think we'll be bullish on the monthly trend. So it's very hard for me to say, guys, let's short. That's why I'm doing more intraday trading on the short side and then staying in cash. However, the reason why we might finally start to see either a pullback or overall choppiness in this market, and it could be a very wide range of choppiness, right? Think of Amazon last year. Amazon has been in a huge consolidated range on the weekly chart, ranging around 600 points, 700 points, right? But it's still a consolidated range. So this is what we might start to see on SPX. And the reason why is because we are finally starting to show exhaustion levels on momentum, and we are finally starting to get a pullback signal. And this bar prints, next week? Or does it print early? It prints Monday. So not this upcoming Monday, but the next one is when this bar prints, right? It prints at the end of the month, so January 31st. That's on a Monday. But right now, right, we're getting very close to that. And so I've talked about this some at Simpler, and I've mentioned really since October, we have been seeing these monthly momentum bars flash between red and green, right? So that's already our first clue. If you've been keeping an eye on the monthly, that's already your first clue that we might be starting to get to monthly exhaustion, right? We might be finally starting to see it. This month, it finally looks like it's going to print, right? Print its first red bar. When you get red bars, let alone at the top of the axis, that's usually a sign that, in this case, the bullish trend is done, and we will either start to chop or we will start to pull back. That pullback is a very healthy thing for the market to see. It allows indicators to reset. It allows prices to kind of correct and get back down to a quote unquote normal trading level, right? And it allows us as traders, right, not just as investors, but as traders, to be able to first play this potential pullback to the downside, or to get a very good buying opportunity to play for a bounce back up in the market. So don't be as scared, right, of bearish moves. We just need to recognize when they're coming in, as well as what kind of trading do you want to do in that kind of market. So right now we're making a bearish divergent bar for the month. We've had back-to-back divergent bars the past 5 months. So back-to-back divergent bars are usually more a sign of chop. So, we might not get a strong lower low. At the same time, right, when we pair it with this could cause us to stair step down, right, on the monthly, especially if the Fed news doesn't end up being too hot, right? If they're like, no, we're keeping with the hawkish sentiment, if it's anything the market doesn't want to hear, and vice versa, right? We're getting big earnings coming out soon. So if these earnings disappoint in any way, whether it's with the actual numbers, whether it's for their, future outlook or whatever, doesn't matter. If it disappoints in any way, this is what could help be the catalyst, right, to this stronger pullback. And when we look at monthly support, the ATR trailing stop is at 39.14, not too far away from weekly support at 3,800, right? So right just below that 4,000 level, or maybe right to 4,000. If we really start to break, that's, eventually where this thing could be headed. And we know, in this market, right, typically this kind of move here took us a couple years to see. Last year, we made new rules, right? It took us 2 months to see. And then typically a recovery that takes about 5 to 7 years, from what we've seen both with housing and the dot-com bubble, right? This kind of point pullback, that's the kind of reversal it needed to see. Here, it only took 5 to 7 months. So I won't count anything out of this market anymore, right? You just got to play what the technicals are telling you at this point. And right now, from what I'm seeing, right? We had a great run to the upside. We kept adjusting this axis higher, and now we're finally potentially getting a breather. And it could be a pullback like this, or it could be what we saw in 2015, 2016, which is just consolidation, right? Which was basically, we did technically get a little bit of a pullback, but for the most part, right, the trend still stayed bullish. It allowed momentum to reset, and then you could play it back to the upside. So that is what we will need to watch this week. Is how do these levels hold? Can they hold? And if they can't, we know there's a ways down that we could play this into. So that's what I will certainly be watching overall in the market. But I wanted to make you guys aware of that. Now let's go back to the daily, and we'll go on with our list here. So ACI is the first one. Oh, okay, yeah. ACI starting to be a bit more bearish here, right? We've certainly traded below the 100. Never like seeing that. Momentum was at exhaustion levels here. It reset, and now it looks like it's picking back to the downside. We have a bearish signal in the compound breakout tool. We have a squeeze. We have a true low. Bollinger Bands are flaring open. However, when I saw that, the only thing that is giving me pause here is saying check the weekly chart. Yeah, because we could be getting near weekly support. So notice here, right, the price level around 26, which I guess, you know, for Albertsons, you could still make a decent profit off of a 2-point move. But 26 to 25.71 might end up holding us support, right? This looks more like consolidation that we're getting back into on the weekly chart. The thing to keep in mind is if the market falls apart, guys, we can't anticipate too much holding up unless you like have a honey badger out there that's doing what it wants, right? If the market goes, everything else is going to follow along with it. So, you know, if you are a long-term shareholder, personally, right, in my kids' account and stuff, I hold long-term shares. I don't plan to get out of those. If anything, for the ones that have over 100, I'll do covered calls. And if not, I'll just keep holding. And that's also because, right, I don't mind sitting on those for 10 plus years because I think in 10 years they'll still be certainly higher than where they're at now. So I'm not too concerned about that. But you're right, if you are a shareholder who doesn't want to get out of their shares and we do start to go into a bearish environment, covered calls are a great way to still make a weekly, right, or a monthly income, depending on how you're doing that, and still be able to keep your long-term share and your long-term bullish bias that way, right? That's one way. And the other way, of course, is to do, you know, short-term put trades, but still keeping on your long shares, right, your long calls or whatever else, and still playing the long-term bullish sentiment to the upside. ANF is up next. So this one too is starting to see Bollinger Bands flare open. The 10, a little too zoomed in. The 10 is below the 30-period simple. Both are below the 100, right? Momentum had a great reset and is starting to pick back to the downside. We have this. We have a nice squeeze. Once again, there's a lot of consolidation there. Okay, and that's why. So the weekly we're at support. We're starting to see some exhaustion levels, but Bollinger Bands are opening up. And once again, if the market goes, I wouldn't be too surprised if ANF went down to 26. So that might be one to consider. I would definitely wait for it to break that support though before jumping in, because no matter what, the thing that I am still extremely mindful of in this market, which means I need to be mindful of it at both resistance and support, is the fact that chop has been the name of the game. And we have seen so many times last year where we were at price resistance levels, everything looked great, right? All the indicators looked great for it to take off, for that squeeze to fire to the upside. And then price resistance won, and we went right back down into support. So it's not to say if the market's pulling back, right, then more than likely these are going to start firing to the downside if they haven't already. On the flip side of that though, right, if the market stalls, if it's just chopping, then I need to be extremely mindful that I am at price support. So shorting at this level, if I get a bounce, then I'm either going to need to be very defensive quickly, or I need to do so for a very small amount of capital, so that way if it bounces, I'm not too stressed about losing that money. So that's why personally for this one, I'd wait for the break in the ATR trailing stop here that's at 31.97. So if we start to break that, right, then play it to the downside. You might wait till Friday. Friday might be too soon, right? I'm really expecting some sort of move by Wednesday, personally. I might be wrong, but I really think by Wednesday we'll kind of know which direction this market's trying to move in. HTHT is next. Oh, Mitzi, that's good to know. I don't track the 50 simple myself, but I'll make note of that. So the 50 simple is at 43.50. Where are we at right now? Where did we close at? 4,400, right? So that's not too far away. Oh, I like that even more than for our broken wing butterfly that we have. I like that pin then. Let's go to the daily here. So here's another one where it's been resetting. We're currently in consolidation. The overall trend's been bearish. Certainly every time we've, come up towards this 100 period simple, it's been a great place to short. I think we talked about this in the options room at one point prior to that. But it is pretty flat right now. And we are near weekly exhaustion levels. 25 seems to be a pretty good price level though, so if we do start to break, 25 would be the target to the downside there. I'm curious on some of these on the monthly chart, because a lot, like for example, right? Did anyone play Shop Friday? That one died and fell apart, right? This one actually is one I wouldn't mind taking a trade on, potentially to the downside, just because it's been very volatile like the market, so it's, been a good contender. The daily chart's been falling apart. Bollinger Bands have just been screaming open on this one. The same thing is true with the weekly chart. We're breaking the 100 period simple, right? This is starting to fall down. I was really watching this on the monthly chart. For those of you in the Profit Recycling Mastery or the day trading room, y'all know that 960 was kind of my first target because that was where monthly support was at the time. Now you can see it's already moved a little bit lower. It's at 956. But it was right around 960, and so it looked pretty solid to try and hold that. However, if once again the market's going to sell off, Shop is definitely going to go with it. It is not, it was already struggling prior, so it's going to go down. Which means, right, the next support level here on the monthly is down here at the ATR trailing stop. That's at 655. That's a ways away. At the same time, Shop's a very volatile symbol, so it could potentially see 55 by next week. Now, keep in mind, on the monthly chart, this has had a beautiful run up. So what's happening? We are at exhaustion. It's pulling back. It's actually building into a monthly squeeze. The Bollinger Bands, this is what's interesting on a lot of monthly time frames right now. They're not necessarily flaring open, right? So ones that have seemed like they've been dying on the daily or even the weekly chart, on the monthly, they've just been pulling back into support levels. And the Bollinger Bands are still more in line with consolidation. So, is he? No, he's still asleep. Okay. So because of that, right, it's, I'd probably only be playing this down into support until I get a different narrative, right, until the technicals change for me. So, but Shop, that might be, let me write that one down to remember. Especially if they give us strike increments. For those of you who were trading it, I know this upcoming week's expiration on Friday, they're only like 20-point strike increments. So like something a little bit smaller than that for the, the $500 challenge account so we can keep our risk in mind. Amazon's another one that I've been watching. As you guys know, right, this one too has been dying a bit. I thought we would get a buy-in entry here on the weekly chart, but we are not holding the support level, right? If anything, it looks like this weekly squeeze might start to fire to the downside. And in turn, once again, what does that mean? Well, let's go to the monthly. Oh, right, we're right near monthly support. This is at 28.11 for the monthly. But this is why I think Wednesday is going to be key, because so many of these, right, like for Amazon, for example, right, these Bollinger Bands are still coming up to meet the price. And maybe this is an earnings trade. Let's walk through that. Are earnings next week on Amazon? Or when are they? They're a couple weeks. February 3rd. So 2 weeks. You know, maybe if it's you think they're going to do well at all on earnings, you do a lotto bounce trade. But once again, if things don't look good, I wouldn't be too surprised if these Bollinger Bands start to open up and it brings us lower. However, right, if Wednesday ends up being anything that the market wants to hear at all, like I said, this could make a good buy the dip opportunity. So I would treat this purely as a lotto. Amazon and Tesla are probably the ones I'd consider doing this around for their earnings. I'm a little bit more in favor actually on doing this on Tesla. But let's just price out something for so here is the expiration right after earnings, February 4th. It's anticipated right now to be about a 200-point move. So 200 points up from here would only bring us back to around 3,000. I'm going to go a little bit more than that, right? We've seen a lot of volatility in the market. And if the Fed news ends up being slightly dovish, or not as hawkish at least, and if Amazon does well on their earnings, this could make for a pretty decent trade. But it's the idea that we could at least get back up towards this 10-period simple or higher, right? You know, Amazon can see those kind of moves around their announcements. So the 10-period simple currently is at 3,200 on the daily chart. So let's look at a very wide broken wing butterfly and just see what the cost is right now. Oh, there's no way that would be the case. I'd be very curious. So there must be something funky going on with the options here. Otherwise, if this was really a 13-cent debit, I would take it. Oh, no, I'd do this. If this was a 43-cent debit and I could actually get filled at 43 cents, like a 50-cent trade, that's a good lotto trade. It's a 50-40 point broken wing butterfly, right? So 50 points on the debit spread, 40 points on the credit spread. If you get the pin based off of, let's just say we pay 50 cents, right? So if we get the pin, 49.50 max profit potential, right? We'd obviously close it out prior to that, but you know, certainly a nice risk versus reward. If it goes completely in the money, it still allows for a 9.50 profit potential. So once again, not a bad risk versus reward, and your only risk is 50 cents. So I don't know if that's how it's going to show up on Monday, right? Sometimes when the option chain looks a little funky over the weekend, it, you know, fixes itself once markets open. But if we could get a really inexpensive trade like this, with the, and obviously I'd probably not put this on until closer into the earnings announcement. You know, maybe you put it on prior to the Fed news if you want, if you think the bounce is already going to start to occur then. I'd still probably wait until after the Fed news, but this wouldn't be too bad of a trade idea to consider. Yeah, Tommy, we didn't open anything technically last week because my game plan up until last week was to wait for support to confirm where it was going to hold, and then I was going to, you know, buy in. And if we were seeing the bearish pullback, for me personally, my overall trading plan didn't matter what the account was. I was intraday trading those shorts and the bearish side. And I was, you know, profit recycling, locking in profits, but I was doing that more on the intraday side, and then I was staying in cash overnight. So for the $500 challenge account, one, you know, at first I don't really want to day trade in that when I can help it. And profit recycling, the strategy I get a lot of questions about, so it's kind of hard not to hard to just shove that out there to the public without, being on the mic to try and explain it at a minimum. And yeah, so flow state, I find it to be very helpful to grow small accounts. Like for example, in my intraday account, I do almost always intraday style trades unless I feel really comfortable holding that capital overnight, which I try not to do too often in there. But that account this year I started with 1040 in it, $1,040 or something. But the idea was I'd start the account with $1,000 to see how we could do, and right now it's at 23.59, so pretty good. And keep in mind, guys, I don't intraday trade every day. I'm only on the mic 3 times a week, and I don't trade, every day I'm on the mic. But for the setups that I've been able to find when I've been in front of my computer, that's what we've done. So yeah, I like profit recycling, especially on the intraday. I think it's really good for growing. And especially, right, if we do start to sell off, it's great for this kind of market environment. Like it can make you some really quick money quick. Yeah, Tommy Tahoe. Tommy Toe. I'm probably butchering your name, so I apologize. So yeah, so that's why, for the $500 challenge account, that's why I was pretty quiet during the week, because I was like, there's no buying opportunity. And I apologize once again, didn't quite get the trade I wanted to out there on Friday. So we're going to look on Monday, and it will probably be Monday's expiration, but I think we're going to be in for another bearish day. With the way we closed Friday, it looks like margin call Monday is very likely. Let me pull up Tesla really quickly. So Tesla here. So Tesla's another one where, Tesla's known to be a bit more of a honey badger, right? So out of all of the bigger names within the market, if I were to think that one could at least hold up a bit more than the others, my bet would be on Tesla for that, because it's shown in the past that the market can be down and Tesla's still, ripping to the upside. So that's one thing to note. Might not this time, right? But the other thing is, I think this weekly, right, this earnings could also cause for a bounce up, because not only on the daily chart has this done much better at holding up compared to some of the other symbols, right? We're still holding above the daily 100-period symbol. But on the weekly chart as well, we've been in a consolidated range, and we're right back at that weekly support by the ATR trailing stop. Technically, it's at 917, so we're still, a little above it, but we're right around that range. Just below that, the 30-period simple is at 871. So we could move just a little bit lower too. And I will note momentum has quite a bit of room to go down, but what's been interesting, and this could still change, right? If earnings ends up disappointing at all, this could completely change the narrative. But what I found interesting here is, unlike a lot of symbols where this is their momentum right now, right? It's just a pure stair step down. Tesla on the weekly chart is actually starting to flatten out some, right? It's still technically red bar after red bar, so it is still weakening. But the fact is, it's not stair stepping down pretty strongly, right? It's starting to even out, starting to curve. And typically when you see that happen, the momentum starts to pick back up. And usually you go back into another bullish trend, right, from that consolidation, and that's enough of a pullback it needs before going back up to test the top of the axis on the momentum bars themselves. The compound breakout tool down here has still been hinting at consolidation more than anything else. And the Bollinger Bands are still flat, so I don't know, if I'd play this strongly to the upside, right? That's not my rule book this year, at least. My rule book right now is if support holds, right, and this is very current for this market because we're not looking too good, but if support continues to hold, right, that's the buy-in, and I'm only looking to just play up into resistance levels. The first one on the weekly chart would be 1032, followed by the 1200 range. And as we know, last week we were trading more between 1000 and 1100, so those would also have to be levels I would need to be mindful of. Now, what I don't like on the daily chart are the Bollinger Bands are flaring open, right? Momentum starting to cross below the zero line. So could be a case where Tesla decides not to be a honey badger. Let's pull up that one because this one's next week. So this one, I might not do this for the challenge, but guys, if you really like the trade idea, if you don't mind taking a lotto trade idea, right, doing a very small capital risk around it, feel free to, open these in your account if you want. The anticipated move for Tesla next week is around $94. You might wait to put this on closer into the news itself. What day is that? It's the 26th. That is Wednesday. Wednesday aftermarket, I think is what that said. So you could wait till Wednesday to put this on. That way they're, better arranged with wherever the price is currently trading at, right? If we fall down another 100 points here, but then news does great and it bounces up 200 or something, right? Well, you don't want to have that priced out at the start of the week when you needed it priced out right before the announcement. So keep that in mind. I'd probably wait till Wednesday to put this on. However, let's say on Wednesday we're trading at 943. Well, I kind of like the idea of doing something like a broken wing butterfly here, but doing it on both sides. And this is another way we could also consider doing Amazon too, right? Is doing one on the call side, but also doing one on the put side. So this is I want to keep this cheaper personally. I like that. This is a 15 10-point spread. It's a $1.77 cost basis, right? The max profit potential is $13.23. If it goes completely in the money, it still allows for about a $3.23 profit potential. Yeah, I think I like that better. It's only like 30 cents more. So 10.15, but once again, right, we don't know which way earnings could go. What if it completely disappoints? Nobody likes what they hear about it and it tanks. Well, roughly within the range. So we went 50 points out on that side. Let's do the same thing here. We'll go 50 points out on this side. We'll also do 10.15. Oh, a little bit more expensive on the put side right now. So tells you how the market makers are pricing this currently. 282. So the idea though behind this trade is you take the cost basis on both the call and put butterfly. So $1, let's just say $1.80 plus $1.85 or $2.85, excuse me. Let's say we don't get a favorable fill. Oh, $4.65 then. That's a little expensive. That's more than I thought it was going to be. So, right, this is why you price things out. The idea is if we got the pin, it would still be a 1035 profit potential, right? Because 15 minus 465, 1035. If it goes completely in the money, though, it only allows for a 35-cent profit potential. Usually, right, when I do these kind of trades, I want it priced out a little bit better. So maybe we do the 10.15 because that's $1.44 on the one side, $2.20 on this side, so that would be $3.64. Yeah, that would be a bit better. So I'd probably do the 10.5 then in that case. Because the idea is I would want still at least, like $100 profit or something like that if it goes completely in the money. So I'd want my capital risk in total to be less than 4 if I'm doing this kind of spread width. But this is also 50 points out. So the idea too, and because I like those psychological levels personally, but the idea is you could go technically, if you think it's going to be within that range, you go the 100 points out. So that means this should be around 850, which also means this should cost a lot less. Yeah, now here's $1.72, right? And then you go out technically 100 points on this side if you do the anticipated range. And there it's 67 cents. So usually I do the anticipated range, but if you do a broken wing butterfly, right, and you just want to be a bit more conservative, or you think there's a psychological level like 1,000, for example, that you think the price is going to have a hard time breaking above, you can always bring it into that range, right? But that is why personally I would keep it a broken wing butterfly, don't do a standard, because especially in this market and especially with the volatility that can come from something like Tesla, that's, going to work a bit more in your favor if you really get a move. So guys, my kids do look like they're starting to wake up a little. Oops, sorry. But I hope you guys found this to be useful. Thank you for joining me on this Sunday. Maybe you had your coffee with you, right? Maybe you're waking up or had your lunch. But I hope this was helpful in prepping you guys for next week. Like I said, don't be too surprised if you see something from me earlier on Monday, especially if it looks like resistance levels are holding and playing this to the downside, because that is what I aim to do. And right by Wednesday, hopefully we'll have a bit more clarity to know, okay, is this market really going to continue to sell off? Which in that case, right, we might start to change around our strategies even in the $500 challenge and do either more bearish strategies, or maybe we will do a bit more intraday trading. Or if we find up that we're holding support on Wednesday, right, maybe it's our finally buy the dip opportunity. So thank you guys for joining me. I hope you have a great rest of your weekend. For my simpler folks, I look forward to again to talking to y'all on Monday. Otherwise, if I don't talk to y'all throughout the week on Twitch, we'll be back here Sunday again. Have a good one. Bye.